Back in the action here once again. It's about that time of day again here, folks. Back in the action here this evening. It's time to get back to work, though. We got a lot to cover in tonight's video. It's Monday evening. It is October the 7th, 2019. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time today, please be aware I help traders find high-quality trade setups using a very simple three-step trading strategy that we teach and trade together every morning at the opening bell in our trade room. But my job is a little bit different tonight. My job tonight is to help you guys identify the best levels of support and resistance, find the best entry and exit points for tomorrow, and most importantly, some of the most common traps to avoid in tomorrow's, that will be Tuesday's trading session. And we got a lot to cover here today in this first video of the week. We'll first start off by checking the calendar here for this week. Got some Fed speakers, got some big news, and a holiday weekend coming right around the corner. So we'll definitely check the calendar here tonight. Then we'll open up those charts. We'll grab some oil, S&P, Nasdaq, and we'll wrap up on that mighty gold, right? That yellow metal. I'm going to jump in here first over on oil because boy, oh boy, oil, the bottom just completely dropped out of oil. Strong move lower on the black gold. That means we're probably going to get one more leg going for tomorrow. Let's grab that oil chart. Kick off this newsletter video for you guys and gals here this evening. And as I said last week, right, always great to have you guys here with me here every evening. I apologize for missing you most of last week. I'm finally almost back to full steam here after that kind of head cold I got last week. So I do appreciate all the patience there with us last week. Cracking open, though, a brand new week here. What do we have here on the oil here today? Most of the last couple of days have been nothing but bullish. Here you'll notice on oil, but the party's over, though, for the bulls right now. Big, strong push down off of those highs today. Anytime I see a very strong move in one direction, I always know I'm going to probably see another leg. And really what I'd like to do is I'd like to use the high of this hidden channel. You'll notice I've drawn in here. I'd like to use the high of this hidden channel to try to get this thing back down into that trading range. And I'll tell you, possibly all the way back down to that 51 tomorrow. I got a great plan on the oil. If you're an oil trader, we're looking to sell up around that battle zone. I'm going to talk about all the details of how I want to get in, what patterns I'm using. We're going to break all of that into small bite-sized piece tonight on the video. Over on the S&P is similar to oil. A lot of bullishness over the past, right? Maybe 36, trading hours, right, from last Friday into today, but it looks like just like the oil market, it looks like the S&P, they went up, they got their big measured move, and now a very strong 1, 2, 3 coming off of that, right off of that high. I've got to give the bears the edge here right now, and of course I want to be a seller at resistance. I've got some great levels of resistance I'm watching here overhead. I've got a couple key patterns. I'm looking forward to be a seller here on the S&P. I might be wrong about that, though. This market might be sliding down into a pendulum swing. So if we do get that big pendulum swing, we'll talk about how to buy this market off of those lows. And we'll also talk about what I'm going to need to see if I start to sell this thing, or if I start looking for sell setups back down to that 2,900 for tomorrow as well. So looking at a range right now, a little bit more bearish than bullish in the short term. Looking to be a seller here on the S&P, but I'm not ruling out a buy side setup on the S&P late tomorrow morning. So we'll grab a look at that in a moment. Over on the Nasdaq is in a very similar position to the S&P. Lots of bullishness over the past day and a half of trading here on the Nasdaq. But as you can see, though, they barely missed that measured move overhead and a big strong push off of that moving average. Excuse me, that definitely gives the bears the short-term control of this market right now, with momentum now for the downside. I'm looking for a couple areas of of resistance here that I can sell right up overhead. Got a couple key patterns I'm looking for here to be a seller up inside that battle zone on the Nasdaq. If I'm wrong about that, if we don't get the pullback and the market continues running lower, we do have that pendulum swing waiting down here, and we'll then look for possibly a late morning rally back up into that range tomorrow morning? Or do we go all the way back down to retest those lows? We've got that range all the way back down around that 7,500. That might be in store here for later on this week, but we need to see some proof before we can go, right, trying to be too aggressive on that short side. So right now, I like the sell side in the short term. I like the buy side in the medium. And of course, we'll put all the plan together here tonight on the Nasdaq. If you're an NQ trader, you want to stay tuned for more on that. Over on the gold here, gold is bearish here as we go. You'll notice your gold, for the most part, ever since about the beginning of the, or say midday, what is that, last Thursday, right? We've been pretty much a bear market here. We got lower lows, we got lower highs. It's not difficult to see that we're bearish. I definitely want to be a seller in this market right now, but here's a really, really big clue on this gold right now, and that is this wide channel. Now, if you're a veteran viewer of this newsletter, you know I've got a very strong opinion about wide channels. Wide channels are very difficult to trade if you don't know the right strategy for them. So we'll talk about the best way to sell off of this channel high, and I'll give you a hint. I'm not even thinking this thing will go back to that high. I'm looking for a sell here up inside that battle zone in the short term, and then possibly right up around that high here, right, if we don't hold in the battle zone number 1. I've got that pendulum swing looking for a target down here, and then possibly a rally back higher, but that is a pipe dream right now. We got to wait patiently here to get that pendulum swing. We're going to break this down into all kinds of small bite-sized pieces for you guys tonight on this video. We'll talk about the short-term sell, the long-term sell. We'll talk about the buy side here on gold as well. I've got everything ready and lined up for us tonight on the video. Got the gold, the Emini S&P, and the Nasdaq, and of course that crude oil futures. Before we jump into the video tonight, before we put the entire strategy to work for you guys for tomorrow morning, I just want to remind you that right before I publish this video on our YouTube channel every evening, I send out an email to everybody on our mailing list, and I want to make sure that you get that email. That way you get the first crack at this video every evening when it goes live. Joining the mailing list is very easy. All I need is your name, your email address. Hit that subscribe now button, and then don't forget, when you subscribe to the newsletter mailing list, your job isn't over yet. You still need to go out and check your email inbox to get that welcome email. And remember, sometimes that welcome email gets stuck in your spam filter. So check your spam. If you don't see it in your inbox, that welcome email will have a very important verification link. I need you to find that verification link. Click that welcome link, right, and that will give me approval and the green light to email you every evening when this nightly newsletter goes live. So don't forget, join that mailing list. That way you never miss another great video. And how about questions tonight? If you're here for the first time right now, or if you're a relatively new trader, you may have a lot of questions as I go over the video here for you tonight. If you have any questions, drop those questions right in the comment section below. I am always hanging out down there inside the comment section. So post any comments, any feedback, anything you'd like to see me do more of, anything you'd like to see me do less of. I'm always listening, guys. I've been running this newsletter, right, for over 10 years here at School of Trade, and I haven't been able to keep it doing so well for so long by not listening to all of your feedback. So drop me some feedback in the comments section below. What do you love most about it? What would you remove, right, if you had the decision to make over here? And again, if you have any questions about anything we talk about in this video tonight, grab those comments in the comment section below, and I'll shoot you back right in the comment section below. Also, don't forget, while you're down in the comment section, hit that thumbs up button for me. Always appreciate it every time you guys tune in, and believe it or not, every time you hit that thumbs up button here on YouTube, it helps me to expose this video to other people who are dying to learn this great trading strategy, right? So drop those questions in the comment section below, hit that thumbs up button for me. I always appreciate you guys helping me support this YouTube channel, and don't forget to subscribe. That way you never miss another great video. And don't forget, if you have any more questions, don't forget, you can always call me in the office, right? Maybe you don't want to type your question in on that in the comment section below. Call that toll-free phone number. Use that live support tool. I'm always just a phone call away to answering all your questions. You know, we get a lot of questions every day here in the office about the best charting software, brokers, and datas to use, right? How to open up accounts from different countries around the world, or maybe you want to get more information about our free trading classes or get access to our trade room on a free pass. Grab that toll-free phone number, grab the live support tool in the upper right-hand corner. I am super excited to speak with you there on the telephone. But in the meantime, though, let's get this video going tonight, shall we? You guys didn't come here and talk about calling me in the office, right? You came here for the good stuff here. Let's grab some stuff here for tomorrow. Let's get this video newsletter underway here. This, of course, is the calendar for tomorrow, looking at the week ahead of us here this week. Now, taking a quick glance here at the week here, right, we, of course, now are through Monday's trading session. Tomorrow is going to be a Tuesday, right? Tomorrow, we really don't have a lot of major news on the schedule tomorrow. We get the PPI number at 8:30, and we get Jerome Powell speaking at 1:50 Eastern time. Now, obviously, that PPI number will definitely be on our radar early tomorrow morning, but something to keep your eyes open for tomorrow if you are at your desk around 1:40 to 2:15, 2:30 tomorrow afternoon Eastern time. Of course, we got Jerome Powell speaking some opening remarks right at a conference here locally, and so of course we do expect anytime Jerome Powell speaks, he may say something, right? He may not, so be aware of that, but he may say something that may get these markets rattled up here, because remember, later on this month, at the end of the month of October, we have another big Fed meeting, and we know they're going to probably cut rates, but we're waiting to see here if they're going to back off of that towards the end of the month of October. Everyone will be paying attention to what he says here tomorrow afternoon. Now remember, we trade every morning in our trade room from 8 o'clock to 11:30 Eastern time, so this will technically be in the afternoon session, but again, if you're around your desk watching charts tomorrow afternoon, you want to watch out how those markets respond to the Jerome Powell speech at 1:50 Eastern time. Then going into Wednesday again, right? Got some news on Wednesday, jolts, right, at 10 o'clock Eastern time. We got the inventory report at 10:30 for oil. Jerome Powell's back in the mic at 11 o'clock, and we got the FOMC meeting minutes on Wednesday. Wednesday, as you can see, is jam-packed with lots of market catalysts. Looking forward to Wednesday's trading session. And then we go into the last couple days of the week here. Now, the reason why I kind of break these into one category is because this is, technically speaking, a holiday weekend right around the corner here. Next Monday is the Columbus Day holiday. Now, you will have some confusion on this. Next Monday is kind of one of those half holidays, whereas some states observe, some states don't, depending on where you are around this world, right? The schools might be open, but most of the time, though, when Monday is a holiday, Monday is a federal holiday, some states may not observe it, but again, federal holiday on Monday. Markets will technically be open on Monday, but because the banks and schools are closed on Monday, this is next Monday, of course, right? We know that Friday becomes a trader's holiday, right? So Friday is going to be a kind of a half day in the markets, which means Thursday becomes a very, very big day for traders. So I know that was kind of a long-winded way of saying it, but Thursday becomes a very, very busy day for us because in theory, it is the last full day of trading, in quotes, full day of trading before we go into, right, that Friday kind of, so-called trader's holiday, right? That kind of early in, early out Friday session because it is a holiday weekend. And not just any holiday weekend, right? The first holiday weekend of the fall season. So we'll talk more about that as we go here. But most important thing, though, is Tuesday, Wednesday, Thursday this week. These are going to the days where you want to make your money. Friday is very much this point, very much a question mark, right, as we go into that holiday weekend. What else do we have going on here this week? Thursday and Friday, we got more trade negotiations. We got the vice premier, right, from China, and of course the negotiators from the U.S. Everyone's talking about trade on Thursday and Friday. So as we get closer to Thursday's trading session, we heard today some very, I don't know whether it's good news or not, but we heard some relatively optimistic talk from both sides, the U.S. and China. Tomorrow we may hear some more of that kind of flirtatious, right, chatter back and forth. Everything looking very positive right now towards the U.S.-China trade talks. But we've been here before, haven't we? We've been here a few times before. We've seen this thing go up the ladder a couple times already, right, and then come crashing back down. So we may have euphoria going into tomorrow afternoon, and then we may end up crumbling back down for Thursday. So it's very difficult to tell what exactly is going to happen right now. One thing we do know, though, is I would expect the Twitter feeds, I would expect socials, right? I would expect news media to be digging into any potential rumors about that U.S.-China trade talk. And as always, we will definitely be keeping our eyes and ears open for that in our trade room every morning this week. So quite a busy week, a relatively short week. Again, it's not officially a short week, but because we got that weekend coming up, the holiday weekend coming up, Tuesday, Wednesday, Thursday, half day on Friday, trade talks on Thursday and Friday. Jerome Powell making a guest appearance a couple times this week already, as you can see here as well. So we've got quite a few market catalysts here on what is normally a pretty quiet second week of the month. So we'll definitely take it. Lots to look for, right, throughout the week. Tomorrow we got the PPI number, right, and Jerome Powell. PPI, of course, being on our radar first. And, of course, the afternoon session will bring Jerome Powell. And as always, we'll be in our trade room every morning, 8 o'clock Eastern time, like clockwork, executing this strategy together. That way you don't have to go out there and lose a lot of money and stress about all this stuff when you're learning. But for now, though, let's jump to some charts here for us tonight. Jumping in here first here on the oil, we get some oil, some S&P, some Nasdaq, and some gold here tonight. Jumping into the oil right now, oil has been for the most part bullish over the past couple days, but as I mentioned earlier, that strong move down right now, right, gives those bears that momentum. And anytime we see that much movement in one direction, we're going to probably be headed for another leg in the same direction. So I've got my eyes on a move going lower, right? I know the bears have it. I want to get short. I want to sell off resistance. So where can I find some key levels of resistance? Well, first of all, I can mark up these lows, bring that up around these highs, and that's going to create a key level of resistance there, right? That 30 to 35 area. Then we also have that prior swing up at 36. Combine those two areas together, you've got a great spot there for us right now to look for a short going back down into that trading range. And as you can see too, you might be wondering, why do I have this bull channel on here? Well, I'm anticipating a lot of buyers right now. I'm anticipating buyers might try to buy off this channel low. And so I'm hoping as they try to buy off that channel low, I'm hoping they get in trouble up here and I can sell this sucker now right back down, right, to retest that trading range, right? That range from late last week, right? Actually, middle of last week, right? That trading range looks like we're going to have, right, that trading range back on our radar here again as we try to go lower. So let's zoom into this a little bit more fine details here so we know kind of what we're dealing with here. Now you know what the big picture looks like. I've got that bull channel here. And again, I'm thinking we're going to see buyers here try to buy off of that low. I'd like to see those buyers try to buy off that channel, get that pullback coming over, see if I can get those buyers to buy a pullback off that moving average, and give me a shot now to sell, again, up around those levels of resistance that I mentioned earlier, right? I'd like to go out, find that level of resistance. I've got this hidden channel drawn up, as you can see. I'm drawing off these lows up to that high. That creates that level of resistance. I got this resistance right there, right? So now, if I can get these buyers to go up, right, to buy off the low of this channel, that'll bring the moving average around. What I'll do is I'll look for those buyers to try to buy that pullback. Now at this point, momentum is very bearish, and so the buyers don't have a very good edge in the market right now. What we'll do is we'll think about where their stops are, right? If I was a buyer, where would my stop be? My stop would be right below that swing, and that's exactly where I now want to be selling for what I call a buyer failure setup, right? It's a strong move up. That gets the buyers thinking they want to take this market higher. Once they commit to buying off that pullback off the moving average, now we know where their stops are, and we're looking for a way now to sell into those stop losses. Where's my target on this? Like I mentioned earlier, my target will definitely be a measured move back down. So imagine we pull back here, right? Can it calculate that one leg, two leg, and that will be my target, right, as we go back down to the opposite side. Now, as we go higher, though, what would cause me now to be a buyer, right? What do I need to see that would get me back in the mindset of being a buyer here? Well, we'd have to see a full reversal on this, right? So imagine now for a moment, right, we get that pop higher, the moving average comes over, the buyers now try to buy that pullback, and they succeed. Right? Now we get what I call a 1, 2, 3 reversal, right? You see one back here, right? Big strong push down, 1, 2, 3 reversal, right? See how that works? Same idea, right? 1, 2, 3 reversal, 1, 2, 3 reversal. Now look what happens over here after it goes higher. Look what happens. They mark up that high down to that low, and look what happens. They buy that pullback off that low. So you literally are seeing exactly what I'm anticipating if the buyers take control, right? I want to mark up that high, mark up, let's make it same color there, right? Mark up that hidden channel. And again, buyers bought over here, right? Same idea, right? Mark up that high, mark up that low now, and we're looking to buy that pullback off that hidden channel. I call those a 1, 2, 3 reversal into hidden channel pullback. 1, 2, 3 reversal, right, into hidden channel pullback. So again, as we get this pullback going higher here, we go up looking for buyers to fail, right? And again, because we're so bearish going lower here, I can sell right into those stop losses, right? Target back into the range, but more importantly, target being that measured move here for tomorrow. Or do we get that 1, 2, 3 reversal like we mentioned earlier, mark up that high, mark up that low now, and now we've got the high of day, right? That retest of the high, that measured move, right? That gap from last week or from earlier on in the month of September up at 58. Those become our big targets, right, for tomorrow. The key is going to be, though, we don't want to get too aggressive on trying to be a buyer right now. That's the key. I'm not trying to be a buyer off that first pullback. All right? I realize this one worked, right, but we have no idea. We cannot base our next trade based on what happened the last one, right? Over 100 of those trades, then you can start making some educated assumptions. We're not quite there yet. So don't let that previous pullback holding, don't let that make you think you can buy that pullback. Wait for that 1, 2, 3 reversal coming off that moving average, mark up that high, mark up that low, right? Again, you're literally marking up the highs here, finding that new channel, and we are buying now off the low of that channel. A couple of things here. What if it keeps going lower, right? What if the mark goes lower here? Watch out for us settling into this range here right now. We do have this range. You don't want to trade inside the range. So if we end up, again, there's your range right there. If we end up back inside this range and we start chopping around on this, the market becomes balanced with a little bit of a bear bias to it. And that means now up inside these sell zones, right? These two sell zones overhead, what I want to see is I want to sell high using a very similar pattern to we saw back here. Notice how the mark goes above the range. The buyers try once to break out. The buyers try twice, right? And sellers are waiting to sell right back down again. Same idea here. Wait for the market to go up. Wait for that pullback to the moving average. get those buyers to try to buy it. We know where their stops are now, and we're selling right into those stop losses. What do we call that pattern? We call that a two-try failure pattern. When the market ends up back inside of a range, let the buyers to the breakout. There's one thing rookie traders love, and that is breakout pullback patterns. Wait for that breakout pullback pattern to signal. Now you know where the pain starts. Now you know where all those breakout traders are getting stopped out for a loss, and now we can sell right back into that trading range. Now, what if we keep going lower here? What if we keep going lower? What if we drop and keep running? Now remember, this does not mean we sit inside the range like this. Right? If we sit inside the range like this, now it's a balance market. If we run going lower, though, here are two things to keep an eye on. One would be a nested reversal or nested failure, going back up into the range. Okay, as we go lower, let the bears try once. Let the bears try twice. Look for a trap low, right? I call this a crown reversal. It's ultimately a failure setup, right? Remember, I can be a seller with a buyer failure up above the high of that range, and I can be relatively aggressive being a seller here because momentum is bearish. If I go lower though, and I want to be a buyer going back up into that range, right? Range bound markets tell us to buy low and sell high. We're trying to sell high right now. How can we buy this thing though? How can we buy it going back into that range if this market is very bearish here? Very carefully, right? Got to stay patient. Let the bears try once. Let them try twice. And we can buy up from there. I call this a nested variation of that failure pattern. It's very similar to your typical two-try failure. This one goes one step further, though. We let the bears try once. We let them try twice. Ideally, we'll trap below that low and back up into that trading range. But wait a second. What if the market wants to go all the way back down to retest that low? How do we get short, right, down to that 51 even? 1, 2, 3 breakout, right? 1, 2, 3. 1, 2, 3. Mark up that low, mark up that high. And we're selling off of that high with that target down at 50.99, right? We'll call it 51 even. So again, if we do get this thing, right? If we do get this market to run lower, we're not out of the woods yet because you still got that trading range. What goes up will come down. What goes down will come right back, right? But if we do go lower here, I want to buy back up into that range. 1 try for the bears, 2 try for the bears, right, and back up in. Or if we go 1, 2, 3, this is the same pattern, 1, 2, 3 breakout higher, the same pattern we see going higher here, or that we're looking for going higher, is the same pattern to confirm the breakdown. 1, 2, 3 breakdown. Because it's a range, you've got to look for that confirmation, find that new channel off those 2 lower lows, find that high, and we're selling, in this case, off the hidden channel high. Target is down at that 51, right, and change down there. So now you know the basic idea here for crude oil, right? We are overall range bound. The bears have short-term control, looking to sell up around those highs, using those failure patterns, looking to buy underneath the low, using those nested failures. We're also watching for the 1, 2, 3 breakout going higher, the 1, 2, 3 breakout going lower, and we'll be ready to trade this stuff tomorrow morning at the opening bell in our trade room. Now, if you're here for the first time today, I want to give you a much deeper dive into all these patterns I'm talking about here today. And what I'll do is I'll put a link in the upper right-hand corner for you to grab our free trading class. Now, our free trading course, I think, is an incredible way for a new trader or even experienced trader to learn all the setups, learn my 3-step strategy. If you're new to this newsletter here every evening on the blog here at Sideways Markets, definitely grab that free trading class. The free trading class includes access on a free pass to our trade room. It'll teach you all about our 3-step strategy, the same stuff we do every evening right on this newsletter. That way you'll get the most out of our time together every evening on this video. So don't delay, guys. Grab that free course. I'll put a big link in the upper right-hand corner. Obviously on YouTube right now, I'll put all the links, the description of the YouTube video. I'll also put a big red button here below the video tonight on the trading blog. Either scroll below below the video on the blog, or hit up that link in the upper right-hand corner here on YouTube. In the meantime, though, let's keep this party rolling. How about some S&P here? S&P and the Nasdaq are very similar here tonight. We, of course, a lot like oil, have this bullish overall momentum going higher. They got a measured move target overhead at 2960, and you can see here they get that 1, 2, 3 reversal now coming off of that high, right? This is exactly what I'm talking about when I say look for the 1, 2, 3. Then I know we're bearish now. I mark up those lows. I'm trying to find a level of resistance now that I can be a seller off of. I pin it up to those highs now, and now I know exactly where I've got some great levels of resistance here overhead, and I can definitely look forward to selling right up around the high of that, right, of that hidden channel. Now remember, the most important thing right now on this S&P is this range. Right? We spent a lot of time early in the session this morning, up, down, up, down, up, down, right? We broke free, and then, of course, what starts off in a range usually finishes with a trading range, and of course, we're back now right into that trading range. So again, when it comes to a range-bound market, guys, don't forget, you want to buy low, you want to sell high, and you want to avoid the middle, right? Now, I use the size of this range, right? The size of that range helps me now find my buy zones. It helps me now find my sell zones. You'll learn all of these details, by the way, inside that free trading course that I mentioned earlier. The key here, though, is whenever we have a range, buy low, sell high, and really at this point now, it's all about trying to be a seller, because you can see here as we go back down into that trading range, we're definitely back into that range, but that momentum is all on the side of these bears right now. So how can I sell high above the trading range without selling inside the range, right? Let's clean this up a little bit here, get that off of there. Get those off of there. I know we're bearish. I want to be a seller at resistance. I mark up the lows. I find my hidden channel. And now what I want to see is I want to see these buyers try to buy this thing up, or get some profit taking right now from the bears. If I can get those sellers to take some profit, I might get this price up to the high of that channel. These buyers, right, will hopefully confuse this as being a reversal. If I can get those buyers to try to buy off that pullback, as long as I'm not inside the range, that's going to be the hard part here. I don't want to trade inside that range, right? It's a very narrow range. I don't want to trade inside the range. I want to get short up above that top of that range, right? So as the market goes higher, I'm looking for that moving average coming over. Let those buyers sort of buy off of it, right? And then we'll look for that sell, that failure pattern going back down into that trading range. But what if we don't? What if we got something like this, right? What if it went up and then it pulls back like this? What would I do in this situation, right? See, I don't want to take that trade. That's not going to be a very good one right there. What would I do? I'd look for a trap, right? I'd watch for a trap high on this instead of looking for a failure pattern. Anytime I'm worried about not having enough space to take the trade, I like to use a specific pattern called a trap pattern, right? So imagine now we go up, the buyers now try to buy the pullback. We now know where their stops are. We want to sell right into those stop losses now, right? But now we're selling right into that range. So what I'll do is I'll skip the short, I'll mark up that swing and look for that trap. Right? And that trap, you'd be amazed at how often you'll get that trap. When the failure triggers inside the range, oftentimes it'll come right back up, trap high, right, and give you a chance to sell it on the way back down. So two easy setups here on the S&P. Up, buyer failure, back down into that trading range. Again, buyers trying and failing off of that moving average, or, right, a failure that may not fit very well, a trap high here up above. And don't forget, guys, right, if what I'm saying right now is going way over your head, not to worry. Grab that free course. Again, it's all linked up in the description of the video right now. Grab that free course. That will get you the foundation you need so you and I can work together here tonight or every evening right on this video newsletter. Now, what if the market goes sideways here? What if it goes sideways? If it goes sideways, nothing really changes. We are still a little bit more bearish than anything else. We're back inside the range. Remember, anytime I have a trading range, I want to buy low, sell high, avoid the middle. My favorite way to sell high will be if we go up, right? Let that breakout happen. Don't trade the breakout, right? But wait for those rookies to try buying that breakout pullback, right? Rookies love, I know I loved them when I was a rookie trader too. Rookies love those breakout pullbacks, right? It seems like such a good idea at the time, but most of the time these breakout pullbacks are going to fail. Once we see them try to take that breakout pullback, now we know where stops are, and we're selling literally right into those stop losses with the proper signal. Where's my target now? My target, of course, is back down to the other side of the channel, other side of the range, and then measured move, right? 1 and 2, right, for that final target, right? So measured moves make for excellent targets. The other side of that range will make for a good target there as well. So S&P is looking pretty good there if we can get that rise going higher here. How about a buyer side, right? What would a buy look like? As it goes higher here, the buyers have to take control. Now, this is where things get a little bit interesting, right? Buyers now come in, try to take control here. What's the problem now? Now we're running right into overhead resistance. So now, as we go out and try to look for that buy now, this is probably going to be a trap waiting to happen, right? This will be one of those occasions where even though we do get the 1, 2, 3 reversal, we probably don't want to be a buyer up into that high. What I'd rather do now is wait for that buy to fail, mark up for, you guessed it, a trap low. Traps are usually going to be, right, the best setup when you're concerned about what? When you're concerned about buying up into a level of resistance. Now, that level of resistance may not be any big deal because we may end up seeing a 1, 2, 3, right? If it really jumps up to the level of resistance there, if we really get this 1, right, strong move up, 2, and blast higher. Now, obviously, nobody cares, right, about that overhead level anymore. Now we mark up that high, mark up that low, and now with proof of going through that high here, now, of course, we look for that buy here coming off of that low. If we do get that rally, though, where is our big target? Our big target now is back up around, what do we got here? 2930, right? 3000 comes to mind. So obviously this area up there, 29, right? 9330 becomes an easy magnet here for us for the buy side here on the S&P. Now, what if we go lower here on this? What if we go lower? Going lower right now on the S&P. This is where things get a little more challenging, right? For example, let's say scenario 1, in the first scenario, we go sideways here. If we go sideways here for a while, remember, you want to buy low, right? Buy low. If we go sideways in the short term, I can go 1 try for the bears, 2 try for the bears, and buy back up, right? It'll be a seller failure pattern. Now, I can only take the more aggressive seller failure buying into the stop losses, right? Let the mark go lower, let the bears sort of sell the pullback. I can only get aggressive like that if we spend some time inside the range, okay? If we keep on running lower here, now that momentum is way too strong, and the only way I can justify being a buyer, like I said earlier on oil, is to let the bears try once, let them try twice, and then once I see those bears now trying and failing twice now, remember at this point now, momentum is very bearish. I understand we are definitely still in a range, right? I realize we're still range bound at this point, but that doesn't mean we can ignore that momentum, right? There'll be a lot of traders who are going to see this thing as a trend. They'll try once, they'll try twice. Again, we know it's on a trend though, right? We know it's a range, but we still have to respect the momentum there for those bears. Once those sellers now try a couple times there, again, I call this a nested failure pattern. Then we know everyone's in and we can buy now going back up into that trading range. How about a breakdown? breakdown, right? 1, 2, 3, breakout of that range, mark up that low, mark up that high. Remember, you don't want to get caught trying to sell that first pullback, right? You're at the low of a range. It's a good chance it'll go right back up again. So 1, strong move down. 2, pull back to the moving average. 3, strong move off the moving average. Mark up that low, mark up that high, and we're selling right off the high of that hidden channel. That'd be a 1, 2, 3 breakout into a hidden channel pullback. Where's our target now to the downside on that one? It's back down to retest those lows, right? Back down to the big round number at 2,900. I would say at first glance, that big round number at 2900 would definitely be a magnet, but I would imagine, though, that range down around 2890 will probably be where we end up here if these bears have their way on this S&P here, right, for tomorrow morning. So really at this point, we're trying to be a seller up here on the Emini S&P, right? I'm looking for potential to be a buyer here. Remember, though, if we do get that move up, though, watch that overhead resistance, right? Look for that trap and go there. And again, as always, don't forget, we're going to execute this strategy together tomorrow morning, right? And every morning at 8 o'clock Eastern time, right, in our trade room. Let's keep going with some Nasdaq right now. Now, Nasdaq is very, very similar to the S&P, so we'll breeze over this a little bit less detailed than the S&P 500. The bottom line is we know we have an overall range-bound market. There is a bullish bias leading into that range, but this much strength coming off the high, a 1, 2, 3 move off of that moving average. What is that called? It's called a 1, 2, 3 reversal, right? Or in this case, right, a 1, 2, 3 reversal could also be a 1, 2, 3 breakout if we went below the range here again for 2 more legs lower here. We know we're bearish though right now. Even though we're bearish though, we know the market overall is a range. We spent most of the time this morning here inside that range. We jumped up. The buyers try to buy it, and now they're failing back down into that trading range. Range-bound markets, as always, they tell us to what? They tell us to buy low, sell high, and avoid the middle. I mark up my trading range right in the middle. I've got my sell zones overhead, my buy zones here underneath. Stay away from that middle, right? Sell it as it goes higher, buy it as it goes lower. Let's clean it up off here now. And so now we kind of know the basic idea, right? The amount of the move above the range is often the amount of the move below the range. We call that the pendulum swing in our trade room. Lots of great ways to use that pendulum swing. Okay, what do we know right now? We know the bears have that short-term momentum on their side right now. What else do we know? Bears want to sell that resistance. So I'm going to mark up those lows, bring it up to that high. I've got that level high as well. This whole area up there is a beautiful spot for those sellers to sink their teeth into, right, a potential sell there. So we know we want to sell up at resistance. I'd like to get this market to go up, right? Get some profit taking, get this market up off that low, get these buyers to come in, try to buy that pullback, and maybe we get lucky on this one. This has got enough room for it, a failure into pullback combination. Now, we haven't had much open space on the oil and the S&P, but check out this one, right? This one may have some extra space here for us. We call this a combination setup or a double dip setup, which means it's a failure pattern, right? A buyer failure off the moving average. Again, we're bearish, want to be a seller, into a seller pullback pattern coming in off the moving average. Now, notice how I draw this. This happens quite a bit. This is quite common, right? We do oftentimes see the market will go up in a bear market, right? The buyers will foolishly try to buy that pullback, right? Sellers are waiting there to sell into those stops, and then usually it will pull back here, right, and give you a follow-up pattern, which again I call a failure into pullback combination. Now, in the previous charts tonight on the oil and the S&P, we didn't have much space for that pullback. So just make sure that pullback pattern is happening outside, right? Outside of that trading range. And then again, as I mentioned earlier on the S&P, if we do get that 1, 2, 3 breakout, just be aware, right? That'll put us right up around that high. So instead of taking your typical pullback right off the low of that channel, think about now a trap low instead. Find that, right? Find that prior swing. Think about that trap low instead. right? And be a little more patient, get that trap low, finish off that pendulum swing, leave that runner as the market tries to rally higher. And speaking of rally higher, right, who knows what's going to happen overnight, right? We heard some very optimistic talk back and forth regarding trade between the U.S. and China. We may see some more of that coming out overnight. Strong move up, pull back to a rising moving average. Remember, I can't buy this yet. I will look to sell into that failure here, but if they can hold that pullback and jump now, if we can get through that pendulum swing, get up above that big round number, if we really start seeing some strength, mark up those highs, mark up that low, find that hidden channel, and of course looking to sell there now, right up at the high or at the low, right, of that hidden channel. Where's my target here overhead, right? 78.40 level waiting overhead there. Yep, that's an important level. So it looks like we really don't have a lot of open space as we go higher. So be aware of that, right? As we go higher there, that 78.40 area is waiting right there overhead. So this is going to be a very much a thread the needle here to the upside here, right, on the Nasdaq. We're going to want to see that trap, right? That trap low on the way up. Or we get that 1, 2, 3 break higher, mark the high, mark the low. Got to make sure we're getting into that pullback before we get up to that 78.37 and change up there. And again, don't forget, tomorrow morning we'll do it together. That way you don't have to worry about doing this the wrong way, right, and losing money here tomorrow morning. Last but not least here, what if we go lower here? Now remember, it all depends on, do we sit sideways? If we do, 1 try, 2 try, failure back in. If we sit sideways, 1 try, 2 try, failure back in, right? If we go sideways, wait for that breakout. Wait for those rookies to try the breakout pullback. Again, at that point, momentum will have been absorbed inside of that range, which tells me now I can be more aggressive with a failure into pullback combination, going back up into that range. But what if we don't sit inside the range, right? What if we keep running lower here? Now that momentum is far too strong. Now to be a buyer, the bears try once, higher high, bears try twice. Ideally, get that trap low, right? Again, bears try once, bears try twice. Because it is a range, we want to be a buyer down here, but because that momentum will be so strong, right, you want to let those bears try a couple times before you go pull the trigger and running back up, right, into that trading range. Last but not least, though, is that 1, 2, 3 breakout. Mark that low. Use that trend line to find your high, and we're selling off the high, right, of that trend line, right? Makes sense on that one? Right? So if we do end up running lower, strong move down, pull back to the moving average, right? This is where the bears would try once, try twice, and go higher, right? If they hold it though, nice strong move off, sounds good to me. Mark up that low. As long as we see a nice strong jump off that moving average, that tells us now that trading range is broken down. Find my new hidden channel, right? And we can sell off the top of that hidden channel. And again, as I mentioned earlier, I'm just simply marking up the chart as far as what I'm looking for tomorrow, right? Make sure you come out and join me tomorrow morning at the opening bell, and we'll do this all together. So Nasdaq and the S&P are looking pretty similar there. How about some gold here tonight? Now, gold is the market right now that is a little bit more confusing, and that is because we have a couple different things going on right now. First of all, we know the market is ultimately still revolving around this trading range. So don't be surprised if that 1510 to 1505 area, right, we go down, we go back up, we go up, we go back down, right? Don't be surprised if that level, that area continues to drag this market either back up or back down again. As I mentioned earlier in the video tonight, we've got Jerome Powell on the microphone coming up a couple times more this week. We've also got some trade talks, right, to U.S. and China. So I'm sure gold will definitely be on our, right, on kind of our jittery list. I'm sure gold is a little bit nervous ahead of that stuff coming out later on this week. We get JOLTS report tomorrow morning. So gold definitely could be a little more challenging than the other markets here right now. But the most important thing is that range will definitely have us continuing to look back in the direction of that trading range. What else do we know right now? We also know that the market now is moving lower. lower, right? So overall bearish, right? Overall bearish tone. Now, in a bear market, or not bear market, but in a bearish momentum market, we want to look for areas to sell at resistance. Okay, now where's a level of resistance that I can use? Well, typically what I'll do is I'll draw a channel. And you can see this channel fits really well. But there's one problem here. That's a really wide channel. Now, wide channels are a little bit more difficult because they allow momentum to swing back and forth. In other words, right, as we go lower here, that is a lot of momentum right now. Right? And I don't think we're going to probably see, we might, and let's face it, nothing's guaranteed, but I doubt, right, because of all of that, right, because of that last strong move down, anytime we see that much strength in one direction, you're going to probably get another leg, right, in the same direction. So I'm anticipating before we go back into this range, I'm anticipating we're going to probably see another shot going lower. Then we'll probably see the run back up into that range. Now, if I'm wrong about this, the market will try to go back to the top of that channel. The problem is, though, right, is thinking that we're going to go all the way back up and then come back down after that big of a strong move. That's kind of the curveball here tonight on gold. It's a wide channel, which tells me I want to sell the high of that channel. But just looking at this most recent strong move down, it's a real strong move down. And anytime you see that much strength in one direction, they're probably not going to let this go all the way back up, right, and then sell it down from there. They might, but probably not going to be the case here, right, for tomorrow. So what do we do in these situations? Well, in a wide channel environment, I always add in the midline. And the midline, whenever I see these situations where it's a wide channel, and as we go down to the low of that channel, it's very, very strong, right? That momentum move is very, very strong now. That tells me find a level of resistance. What I've done here is I've marked up the underbelly of that range along with, right, that midline, that area right there. Right? That's where I want to look for that sell here for tomorrow morning. Ultimately here on gold right now, I've got so much momentum going down right now. I'm looking for a sell off the short-term battle zone. And obviously too, if we get up top here, I'll look for a sell off the longer-term battle zone as well. Right? Now, how do you know which pattern to use on this? It all has to do with momentum. The hardest part about wide channels, guys and gals, is that momentum really picks up steam, right? Momentum really picks up steam. So as we go higher here, this market will be very bullish at that point, right? So look back here. As they go higher, right? Big move up, what happens? They try once, they try twice, and then it collapses back down, right? They go down here, right? Once, twice, and then it goes back up. So remember, if I can sell off the midline, that momentum hasn't really built up very much for those buyers. So I can be relatively aggressive, right, with a buyer failure into a pullback combination, looking for a retest of that low. Does that make sense? Right? As we go higher here, I can look for those buyers now to think we're going back up to the high of that channel now and let them try to buy that pullback. Again, though, that strong move down tells me that pullback is unlikely to hold. Okay, right back here. Look back here. Strong move down, they pull back, they fail right there. That's the same pattern, except I'm looking for mine right here. So strong move down. Anytime we see a strong move down, we know we're going to probably see another leg. We go up right into that sell area overhead. It's actually the midline there coming in overhead. That's my level of resistance. I know you're going to get buyers trying to buy that pullback. I now know where your stops are. I can sell into those stops. I can sell that pullback to the moving average. Again, with that combination, right? That failure into pullback combination. Just like this last one, strong move down, get above the moving average, let the buyers buy it, right? Foolishly try to buy it, right? And sell that failure into pullback combination. Same thing off the lows here, right? Up, failure, pullback, combination, and back down we go. Now, what if I'm wrong about this, right? What if we do go all the way back up into that high? Well, it really all depends how we get there, right? Let's pretend for a moment now, right? We go, here's one scenario. One scenario is we go back into the range, right? And we start chopping sideways. At this point now, momentum gets absorbed. This is not going to be the strong bullish momentum we thought we were going to get. And so now we can simply use a standard failure pattern. We can go up, right? Let those buyers now try to buy that breakout pullback. And again, because the range has absorbed most of that momentum, we can now sell this thing right back down into that range by simply using a buyer failure pattern. But if we don't get wrapped up in the range, if this thing goes straight up here now to the high of that channel now if I want to be a seller, I've got to respect the bears. Let the buyers, right? The bulls, excuse me. Let them try once, let them try twice, and then we can sell back down. Just like this one back here, right? They went up, buyers try once, buyers try twice, sell it back down. Same basic idea of what we're looking for to sell off that high. Again, trying to use the top of that channel, trying to sell above the top of that range. It's all about what? It's all about momentum, right? Momentum is going to be a very, very big part, right, of this gold. Now, as we go lower here, right, as we go lower, if we do go lower, right, if we don't pull back, right, if we keep going lower, 1, 2, 3, breakout, right, mark that breakout, find that range breakout. At this point, we are being dragged back into that range. If they can hold now this 1, 2, 3 breakout, we can sell off the top of that new hidden channel. Same thing for the upside, right? We go back into that range, 1, 2, 3 breakout going higher, right? Find that new channel, find that pullback off the low of that hidden channel. All right, guys, some basic ideas there for the breakouts, but I've got really 2 nice sell setups, or potentially 2 nice sell setups waiting here, right, on the gold. So the gold's looking good there. It all depends on, do we get the pattern where we need it? Remember that momentum, right? It all depends on, do we go up and fail back down? Do we go up and stick in the range, or do we go through that range, 1, 2, and then back down from there? And guys and gals, I am literally just scratching the surface of this plan here for tomorrow. Don't forget, tomorrow morning, every morning that is, right, at the opening bell, come out and join us every morning. Come trade the strategy with us in the trade room. That way you don't have to worry about losing a bunch of money and making a bunch of rookie mistakes like most of us, me included, right, when I was a rookie. So every morning, 8 o'clock Eastern time, if you want to get registered, if you're on YouTube right now, I'll put all the links in the description of the YouTube video. So grab those links and get registered for tomorrow morning's trading session, right? If you're on the blog right now at Sideways Markets, there's a big blue button right below the video tonight on the blog. So scroll down on the blog and grab that big blue button on Sideways Markets and get registered there. Or maybe you're not ready yet to be a client of mine. That's fine by me. Make sure you grab that free trading class, right? Our free trial, right to the left of my ugly mug. You'll see access to our free pass to our trade room, our free trading classes. Grab that free trial, get registered, learn the strategy, right? At the very least, right? Stop making all the rookie mistakes. That free trading class as part of our free trial will get you on the right track. If you have any questions, guys, don't forget, call that toll-free phone number in the left-hand side there. Use that live support tool right below me tonight on the video. And I'm always standing by here to help you guys out if you guys have any questions on the way. Great to be here with you guys. Big week ahead of us. We'll see you guys tomorrow morning at the opening bell. Don't forget all the links in the description of the YouTube video. Learn more about membership. Grab the free trial. Grab the free course. Grab your free pass. And I'll see you guys soon here on the next edition of our nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.